My name is William Lieberman. I'm the founder and managing partner of the CEO's Right Hand, a boutique consultancy servicing small and medium businesses throughout North America. Today, I'm going to talk to you about what we call financial infrastructure, and I'll explain what that means in 1 minute, but it's basically what you need in order to grow and scale your business. We've been doing this a long time. We've helped hundreds of clients across a variety of industries throughout the US and Canada. Like I said, we've been doing this for about 10 years, and we have a team of 30 plus executives that have seen just about every single problem you can imagine. And we're happy to engage in a discussion to help think through what problems you're facing and how we might be able to help you get through those issues and really, truly grow, scale, and eventually exit your own company. So, what is financial infrastructure? What does that mean when we say that? And why does it matter? Well, let me start with an analogy. Let's assume you're building a house. You need to have the proper foundation, the footings, the cement, the base of the business, or the base of the home, just like the base of a business, has to be in place and solid so that you can build on top of that. So, if you're thinking about building a first story, you got to have, again, have that base put in place correctly, solidly, so that when you add that another layer, you add that first floor, it's not going to collapse on you. And again, as you continue to expand that home and continue to build upon that foundation, you need to ensure that that first floor is done properly and can support the second floor, and the second floor can support the roof, etc. So you want to have in place the various pieces that you need so that as the home, in this case, that you're building, can handle the expansion that you anticipate over the coming years to come. So if you do it incorrectly, what happens? It's going to collapse, right? If you don't put in the proper foundation, if you skip a step on pouring the cement or mixing it correctly, you're going to create a mess. You're going to create a mess in your home, just like if you don't put the proper financial infrastructure in place for your business, you're going to create a mess for your business. And we've seen this time and time again. So think about it. How many businesses do you think when they fail because they don't have the proper infrastructure in place, the poor financial practices? Well, it's a lot. It's a lot because people just don't understand what they're doing. So in this case, US Bank did a survey and they found that 82% of businesses fail because they don't have proper cash flow management, which is one piece of your financial infrastructure. So we want to help you avoid becoming one of those statistics. So let me give you some other real world examples. We were working with a $5 million marketing agency. They had their books put together what they thought was correctly. But when a buyer came in to look at buying the business, and they were going to pay millions and millions of dollars for this business, they found out that revenues were not being accounted for correctly. Revenue recognition was done wrong. And so the buyer could not count on the numbers that the seller was representing. They couldn't tell how much money this business was actually generating, and they walked away. The seller lost out on a multi-million dollar deal. We had a consulting boutique where they had no financial controls in place whatsoever. So everybody from the CEO down to the lowest level person could spend money and it wouldn't matter. It would eventually show up, they would get the information and they would see, oh my gosh, we're running out of cash. Why is that? Well, they had no controls in place. They couldn't manage the spending against a budget. And that helped them sort of cause a major cash crunch. We eventually helped them out of it, but it was a touch and go for quite a while. We had a SaaS company, software as a service company, that was doing about 500,000 in revenues, and they were growing like a weed. And in a very hot space, they thought they could raise 100 or a valuation of $100 million, raise 20, $30 million for 20 or 30% of the company. But they didn't have the right modeling in place. They didn't have the right financial controls in place. They didn't have the infrastructure that they needed. So when an investor came in and looked at the business, looked at the books, they go, oh my gosh, you guys, there's no way you're going to make enough money for me to earn a return on this investment. And those investors walked away. Happens all the time. And the way to avoid that, again, is to put in place the proper foundation for growing and scaling your business. So we put together this framework, Financial Infrastructure 360, and there's 5 pieces to it, 5 major pillars. So what is the first? The first is people. And I'm talking about people within your finance and accounting area. not all the people across the entire business, but making sure that you have the right people doing the right things within your finance group, within your accounting team, and this includes external people. So you could have an accountant or you could have an auditor, but having the right people doing the right things is critical. Technology. What technology are you using to support your back office, your accounting system, your expense management system, your payables system, your payroll system? These are all the different pieces of your technology stack and all the components that are necessary to have in place and have it flow so that you get the right information on a timely basis. Reporting. Reporting is critical. I mean, we're talking about creating a bunch of data, but in order to make decisions, you have to have timely and accurate reports. And the reporting that you get is different depending upon who the audience is. So the CEO might need one set of reports, the management team members might need another, employees might need another, and then you have investors or lenders. So there's a lot of different constituents, all of whom have their own requirements. The data that's in your system, that's the driver for all this information. You got to make sure it's secure, you got to make sure it's accurate, you got to make sure it's timely. So you have to understand where it's coming from, where it's flowing to, but data is critical. And then you need policies and procedures in place so that you ensure that there's no fraud that's happening, there's no extra risk that's happening in the business. You put in place the components that are necessary to ensure that all the people are doing the right things and no one is doing something that they shouldn't be. And these controls help make sure that that happens. And you tie it all together, and that's financial infrastructure 360. So today I'm going to go through each of these components in a little bit more detail. But first, if we go back to our house metaphor for an example, you'll see that, well, what does this look like in practice, right? So think about that foundation, what's in blue and red. Think about that foundation as your people, right? Your people are critical. Ensuring that you have the right people to build upon is necessary for building the proper house and building a proper business. The wiring you can think about is like your technology stack. What technology systems are you using? That's like the wiring in a house. That's what connects things together. The walls holding up the various ceilings and floors, think about that as reporting, right? So all the different reporting that you're getting from your systems can be akin to the walls of a house. Data, it's like your HVAC system, your heating and cooling systems. And then finally, your policies are like the piping in a house. So you got to have all these components in place to build a functional home as well as a functional business. So let me start with human capital as the first one. So as I mentioned before, human capital are the people that are running your back office, running your finance and accounting functions. And so what we need to do is make sure that we have the right people on the bus doing the right things and they're doing them correctly. And that's what this pillar in your financial infrastructure is about. Many people don't feel like they have the right finance and accounting team in place today. That's okay. You have people like us, the CEO's right hand, who could come in and assess how your people are doing and do you have the right people or not. So if you need help figuring that out, just reach out and we'll get you some answers and we can put that together for you. Human capital. So what does that mean? What should the accounting and finance team look like? Well, look, it's going to vary by the stage of your business. A startup is going to have different needs than a $100 million business. And if you have your uncle or aunt doing your director of accounting right on the kitchen table, if you're a $5 million revenue business, that's probably a sign that you need to make a change, right? So how many people do you need? And what should they actually be doing? Well, if you have a $5 million business, that's pretty small in general terms compared to a $100 million business or even a $30 million business. So you don't need as many people. There's not as much complexity. You don't have as many moving parts when you have a $5 million business. But as you grow, $15 million, let's say in revenue, that's kind of a medium size, and $30 million, that's kind of large-ish. In terms of the bulk of small and medium businesses out there. Of course, there are hundred millions and billion-dollar businesses that you can think of all the time, but we're really focusing in on that lower middle market type business. And then how much should you actually be spending? What do these people actually cost? Well, that again increases with the size and complexity of their business. You might only start out with a couple people, And then by the time you get ready to sell the business, let's say you get to 30, 40, 50 million, you might have a team of 5 or 6 or 7 people running all your finance and accounting functions. So the amount that you spend changes as you scale the business. So in the beginning, maybe it's just you, the CEO, and a part-time bookkeeper. That's fine. That's all you need. You don't need a whole team of people because it's a very small business. You have a handful of clients and a handful of vendors, not that many bills. It's easy to reconcile your bank accounts. It's very straightforward. As you grow, you might need some financial help. So that's where folks like CEO's right hand come into play by providing that fractional CFO or a part-time accounting manager to layer in on top of that bookkeeper who has been with you since the beginning, but you need more help. You need more firepower in terms of financial strategy. Do I need a line of credit with a bank? Do I need to raise capital? Do I need to build a financial model, a forecast, etc.? All those things start to come into play when you get up to about a few million in revenue. And then, of course, as you grow further, you're going to need more people. And instead of getting part-time help, you're going to find the need to get full-time people helping you get through the day-to-day of your business, as well as thinking strategically down the road, which is what a CFO is all about. But the day-to-day work, the blocking and tackling, if you have hundreds of clients or hundreds of transactions every day, you might need part-time clerks and full-time bookkeeper and a full-time accounting manager. It can get very complicated. And then again, as you grow further, you add more full-time folks. So these are the ways that the business will evolve over time and the way that your finance and accounting team will evolve over time. There are outside members, so people that aren't your employees, but are involved in the finance and accounting function. People like tax accountants. So you have to do your tax returns every year, of course. But what about tax strategy? And again, as you get bigger, tax strategy comes into the planning process because you could save a lot of money if you think ahead and make sure that you spend the time and energy to plan ahead so that you're not caught flat-footed when it comes time to file, but you've actually thought about how can I reduce my tax liability in a risk-adjusted way. Auditors, sometimes you need an audit of your books, and so you'll have an external auditor to come in and review everything and put their stamp of approval on the way that you're keeping your books. Outside investors will require that. Commercial bankers and lenders. Those are all parts of this team, right? Because they're helpful to you in terms of lending you money or making sure that you have the right systems in place for banking. Wealth advisors and investment bankers also come into play when you get to the point where you have excess cash you need to invest, or you're thinking about making an acquisition or selling the business. So, how much does your team cost? Like, do you actually know how much you spend on your finance and accounting team today? So a medium-sized firm, let's say 7.5 million in revenue, 30 employees and 50 clients. The way that we think about it and put together the cost structure of that team, you need some fractional CFO help, some financial leadership so that you don't have to do it yourself as the CEO. You have somebody that can interface with an investor or a banker, or you have somebody that can help put together the right financial models and forecasts and budgets, figure out the right line of credit, those types of things. So how much does that person cost? Well, in this example is about $63,000 a year, about $5,000 a month. That's typical. And let's say you need some part-time accounting help, right? So somebody will oversee the bookkeeping function. You have a full-time bookkeeper and you have to pay that person a salary and you have to pay them a bonus and you're going to have benefits and taxes and payroll fees, etc. So that person, the full-time bookkeeper as an employee, maybe all in costs you $90,000 a year, but that part-time accountant on top of that person, managing that person, you don't need a full-time employee for that. But when you add these up, the part-timers and the full-time person, you get, a fair chunk of money. $217,000 a year is not insignificant amount of money. Now, for this size business, 7.5 million in revenue, that represents about 3%. So 3% of your revenues is what you should be spending for this type and flavor and size of business. And, as you get smaller, the percentage goes down, and maybe as you get bigger, the percentage might go up a little bit. But this gives you a good rule of thumb, again, for that lower middle market type shop so that you can understand what you should be spending. So what are the takeaways? Leverage fractional staff, part-time in help, so that you don't need to hire a full-time person if you don't even have enough work for them. It doesn't make sense. So hire part-time people. They're going to be much cheaper than hiring a full-time person and paying all that overhead, benefits, taxes, etc. And then when you need to hire full-time, hire from the bottom up. Hire from the people that are least expensive first, because you can get the most bang for your buck from them. And then don't spend more than you absolutely need to for the size of firm you're at. Don't overspend. Don't hire ahead of revenues, anticipating that revenues might appear, because 9 times out of 10 they don't, or they don't appear as in time, and you're caught upside down, meaning you're spending way too much money for the people that you have on the team, and therefore you need to cut back. So you want to avoid that at all costs. So that's the first pillar, human capital. So now we're going to talk about the second one, which is your technology. So the second pillar of your financial infrastructure is your technology. What technology systems are you using to manage the various components of your back office? So one of the things that we think about is integrating systems and the data, right? In a professional services firm, like other firms, you have a ton of data, right? Often in a variety of different locations, different systems. And so choosing the right systems is critical for ensuring that you're doing your business and running your back office in a very cost-effective way. And what's going to happen is you're going to need more and more tools, more and more systems as you grow, and therefore, you want to make sure that you pick a technology stack or the various pieces of your systems that work together, that are integrated, and the data flows easily. You don't have to re-enter data. That causes a lot of errors. And so you want to make sure that you have systems that talk to each other, if not a single system, like a single enterprise system that enables you to put information in once and only once. If you do get best of breed, sometimes you want best of breed tools. So you have your best CRM and your best accounting system and your best Salesforce automation tool. That's fine. But again, you have to make sure that you have an integrated approach to it. You have to have a plan in place to make sure that the data flows seamlessly through these different systems. So as you go from, just like you're going from order to cash through the sales cycle, you need to make sure that the data flows through each of those systems seamlessly. So what are the types of financial systems that you need, right? Think about it. You need an accounting system. Maybe you need a professional services automation system. Again, if you're a professional services firm, billing, ERP, expense management, timesheets, payments. There's a whole host, and there's hundreds and hundreds of these. And I just picked a few, but there's hundreds and hundreds, if not thousands, of different systems that you could go out and buy. Well, it's a dizzying array. You don't need hundreds and hundreds of systems for a $5 or $10 million business. But you do need to have ones that work well together, again, that are integrated, and that you can rely upon to grow with you as you grow and scale your business. So, for example, this is a technology stack for a small firm, and they had three different components, if you will. So, QuickBooks was used for accounting and expense management. FreshBooks, which is a billing platform, did the billing and timesheets, and then their bank did the payments. So you would go on the bank's portal, submit, hey, I need to pay this vendor, and that vendor got paid. Then that information got downloaded the next day into their accounting system. So it's again, for a small firm with not a lot of moving parts, this is fine. You don't need to spend a lot of money and a lot of time and a lot of energy um, over engineering your solution. But as you get bigger, you might need other pieces. So you might need some biz ops, some business development operations, or corporate operations. So like a Monday.com, which manages the workflow of a larger organization, a project management tool, revenue ops, HR, dedicated HR systems, legal systems, accounting systems, etc. Even financial planning tools. So all of these get employed when you get up to a much larger size. So 20, 30, 40 million in revenue, because you need that specificity as to different functions in your business. So if you have 100 employees, you got to have an HRIS system. But when you have 10, you don't. So don't pay for something that you don't need. One of the things that I always tell CEOs and founders is don't chase the next shiny object. It's called entrepreneur disease. And switching technologies can be very costly and it's very distracting to your team. So if you come in and say, hey, I just read in XYZ magazine or newspaper, hey, this is the best thing since sliced bread, we got to use it, that is not planning ahead appropriately. So think about what you need. If something is missing in your requirements, the technology stack that you're using is falling down, of course, make a change. But don't change just for the sake of change and don't change just because, somebody else is using some new shiny object, but you might not have a need for. And then when you get over a certain size, make sure you have a chief information officer, albeit on a fractional basis, that can help you create an integrated set of tools and data flows so that you maximize your investment in all these different technologies and you have an integrated solution that meets all the needs of the various departments and the department heads so that you don't have this ugly octopus with all the tentacles um, and you don't have control over the various systems and technology and data. So spend a little bit of money and make sure that you have a technology leader helping you put this plan in place and helping you make sure that you pick the right set of tools. So that's our technology pillar. Now we're going to go on to the next one, and that's reporting. Reporting is critical. Reporting is how you get information from which you can make decisions, right? Data is just the raw data, but the reports are the ultimate deliverable from your finance and accounting team. So you got to measure your KPIs, your key performance indicators, to know how well you're doing. It's that old adage. If you don't measure it, you can't manage it. So what we do is we think about what are the KPIs for your business that make sense for your type of business, your size of business, and complexity. You want like a handful, five, six, seven, eight or so. You don't want 30. You want ones that you can easily measure, you have the data for, that everybody understands and can rally behind. Things like growth of the business in terms of revenues or profitability or number of new sales that we closed in some period of time. These are standard key performance indicators for, just about any business. But when we think about KPIs, and again, this is just one piece of reporting, we think about lagging KPIs, lagging indicators, and leading indicators. What I mean by that is a lagging indicator will tell you how you've done in the past. A leading indicator will give you some sense as to how you will do in the future. So it gives you a little visibility into what's coming. The lagging indicator, lagging KPI, will tell you how you have already done. You can't change that. So things like profitability, and if you're in a professional services firm, things like profitability or utilization rate. How much did we use our people over the last month or quarter? How much revenue did we actually recognize? How much work was generated that create the revenue, which we'll book and put into our financial system? These are all lagging indicators because they give you an indication what's happened. But if you want to get some visibility into the future, you want to think about our sales pipeline. Because if we have 50 deals in our pipeline, well, and given our historical rate of closing, we know that we can close maybe 15 or 20 of those over the next 3 months, and that they're on average a certain size or flavor, then you can get an idea of how much revenue you're going to be getting from new deals that have yet to close. It's a looking into the future. Or if you think about scheduled hours of work, again, in a professional services firm, it's really important to think about the backlog. How much work is already booked but not yet delivered? And this all turns into what's your forecast for recognized revenue? All these are leading indicators. So an example for your sales pipeline in terms of a rule of thumb might be, hey, I want to have 4 times the size of my pipeline or the size of the revenues that I'm looking at, my forecast in my pipeline. So for example, if I want $1 million of revenue over the next 3 months, I got to have at least 4 million in my pipeline. right? Because I need to have enough because I'm only going to close 25% or a quarter of what's in my pipeline over the next 3 months. So I have to have more in my pipeline than it would be required if I were going to close all of them. So you have a rule of thumb, and each one of these benchmarks or each one of these indicators will have a benchmark that will enable you to see, okay, am I doing okay, or do I need to focus my attention in on this one or that one? And these are the types of things that we can help you with. There's lots of reports. So let's going back to reports. There's monthly, quarterly, annual. It all depends again on the type and size and flavor and complexity of your business. Most people look at monthly reports, right? They get information out from their bookkeeper, from the accounting system that shows, okay, here's my income statement. Here's the profit and loss for the business over the last month or maybe the last 3 months. Here's how I did versus plan or budget. Here's my balance sheet, and am I running out of cash? Am I forecast, right? Here's my statement of cash flows. Where did money come in? Where did it go out and why? And then things like margins, gross margins, profit margin, by service line or by customer, by segment. These are the types of things that are easily generated from your accounting system. On a quarterly basis, you want to adjust your forecast. You don't need to do it monthly, but at least quarterly, you should be updating your forecast so that you know what's coming and you can get some ideas to, do I have enough money to invest in this business given where we are today and given what I'm forecast to do over the next 3, 6, 9 months? You need to be able to make those decisions. Well, you can't make those decisions if you don't have a report that shows you what your forecast looks like. And then on an annual basis, you want to create a budget that you can then track your performance against during the year. Sometimes people like to update their forecast every 3 months, but they lock in their budget once a year, and that's fine. Some people actually have a rolling forecast, and they'll update the forecast every 12 months and look forward 12 months at a time throughout the year, and that's fine too. But you're going to need a bunch of different types of reports. And again, it depends upon the constituency. So it depends upon who's getting the reports that dictates what's in them. So, for example, your board of directors, investors, shareholders might need one set of reports, but your lender at your commercial bank will need something else. And your management team will need something else still, right? They need the information to manage the business on a day-to-day basis, whereas your investors want to see long-term, how is the business performing? The chart of accounts is a critical piece to the reporting because that drives what these reports look like. And there's a difference between managerial and financial reporting. You need to understand gross margin. And what does that mean? Gross margin being revenues minus cost of revenue or cost of goods sold. So that'll give you a sense of, for every dollar that I'm investing in my labor force to deliver on these services, how many dollars am I gaining in terms of revenues from those investments that I'm making? So what is my return on investment, if you will, from the labor, the costs? Think about the indirect costs that you're spending, right? Overhead costs and things like that. So you want to have those categorized on your chart of accounts in such a way that it's easy to see. You don't want a chart of accounts that's 300 accounts long. You want to have different sections: revenues, cost of revenues, and then each of your main departments. Client service could be research and development for those companies that do research and development, general and administrative, sales and marketing, right? Sometimes sales and marketing are combined, sometimes they're separate, that's okay. But you want to have sort of big departmental areas. And then within each of those, here are the 5 or 10 main accounts that we track results from, right? And here are the expenses associated with each of those. So you need to have all these expenses organized so that you understand when your accounting team hands you or your finance team hands you a report, you understand what you're seeing, right? And you have to understand the level of detail that's required in order for you as a CEO to make proper decisions. And so making sure that this chart of accounts is set up correctly from the beginning will give you a huge leg up to really making those decisions in a timely and effective manner. Make sure you use account numbers, right? So that it's easy for your data entry folks when they're putting in expenses on an ongoing basis. It's much faster and it minimizes errors when you have the actual number that you're looking up as opposed to just some text that says telecommunications. And then there could be separate accounts for the month end process, right? And this things like journal entries that occur, accruals that occur at month end. Sometimes people like to have separate accounts for things that happen at month end specifically. Make sure you use your accounting software for what it's good at. That you can set up rules, you can set up different functions to automate a lot of the grunt work, if you will, for putting in the information and maintaining it, AI especially these days. So you can think about, hey, am I maximizing the use of my software? Now, the CEO is typically not getting involved in that, but your CFO or your controller should absolutely help you make sure that you're getting the biggest bang for your buck. So, key takeaways for the reporting pillar of your financial infrastructure. You don't need to track every KPI, right? There's only a handful of ones that make sense for your business at the stage and the industry that you're in. So, just come up with the 5 or 6 or 7 that make sense for you that are really the ones that are most important to you as a business owner. And then make sure that you're reviewing your financial reporting on a monthly basis at least, right? So you get the reports from your accounting and finance team, go through it with them. Make sure you understand the different pieces of it. And if you're not getting the right answers, reach out to a firm like ours and we'll help you understand what they're telling you and assess whether or not you are getting indeed the right information. So the fourth pillar, data. Every business runs on data. There's a lot of data, tons of data all over the place. Every department has its own set of data. So you need to make sure that you have this data collected and put in place and secured in a way that you can manage it and then again make decisions from that data very effectively. So you have project management tools, you have marketing data, you have sales, ERP, budgets, forecasts, timesheets, payroll, accounting, documents, CRM. There's data all over your business. And sometimes it's accurate and clear and clean, and sometimes it's just a mess because people aren't maintaining it in a proper way. And so you need to make sure that you have somebody, especially thinking about data and how it's integrated, how you're getting in data from one portion of your business, one silo, one system to another, and what is the control in place to ensure that that data is safe and secure. So you need data again to drive the decisions that you and your executive team are making. But do you even have the right data in place? And how do you even know? So you need to make sure that you're confident that you have the right data, right? And most people aren't, to be honest. We run into this all the time. People are like, I don't know if I have the right data or not, and I don't even know if it's accurate. And so if you're not confident at all or it's kind of so-so, you want to call in some help and make sure that you understand what's going on and they give you that independent pair of eyes, if you will, not necessarily an audit, but an assessment of what you got and what you're missing. And because you, as a decision maker, the CEO of the business, again, have to have that accurate and timely information to make decisions. Sometimes we come into a client and the books, the accounting system is such a mess that we have to spend time cleaning up the books. And there's a lot of different pieces to that. So organizing the chart of accounts, we talked about that earlier, making sure that it's easy to understand all the different spending that's happening, your balance sheet. You don't have hundreds and hundreds of accounts when you need 50. Ensuring that you're managing your KPIs. So there's a dashboard that shows those KPIs on a regular basis. Putting all the employee data in a system, making sure you have proper ERP solution in place, and looking at data that comes from third parties, right? You have a lot of data that's coming from your internal systems, but you also have third parties that are delivering you data on a daily basis. Well, we got to make sure that that data is accurate and timely and this got the right sort of set of integrity issues, right? You can rely upon the data that's coming to you from those third parties. Storing data. Well, you got all this information, it's all stored. Well, it's in the cloud. Well, lots of things are in the cloud, but you need to make sure that you have a backup and you have storage solutions that make sense, documents storage that makes sense, so that you can reinstitute or put together the information that you need should something go wrong, right? In a disaster scenario, what's your plan, right? So if you can't get to the cloud, if a cloud disappears one day or whatever it might be, what are you going to do? So make sure that you have backups in place somehow, some way, in case there's a breach. You know, you hear about cyber attacks all the time. Well, what are you going to do if there's a ransomware and people are going to hold you hostage for your data? Again, making sure that you have the information backed up in a separate location, in a separate system is critical so that you don't have to pay millions and millions of dollars just to get your own data back. Look at your data security policy, making sure that that's proper in place. And then insurance. Cyber insurance is expensive, but for some businesses, it's well worth it. And so make sure you talk to your insurance agent about cyber insurance. And then data usage. So what data is coming from your accounting system or any other systems that your financial planning folks need in order to do forecasting, in order to put the budget together, in order to measure how well you're performing as a business, and ensure that your operations and HR folks have the data they need in order to make effective decisions, right? So data integrity, data storage, data usage, all tied together. So data collection takeaways. Don't delay, right? That's the one thing. People love to procrastinate, or lots of people can love to procrastinate. And so you don't want to do that, right? Especially when it comes to data security and integrity. Get outside help, right? You're not an expert in cybersecurity and hacking and cyber insurance and all that stuff and technology. So get help. It's okay. And then get help fixing and remediating problems before they get out of control. So spend a little bit of money to get in place the proper remediation that's going to be needed to fix whatever problems that these experts find. And you'll spend the money, but it's going to be well worth it. I promise you. So next, the next pillar, policies, controls, and procedures. These are what's critical to ensure that you have the right risk management in place. So what is the most important accounting policy? Yeah, everybody has accounting policies. Some are written down, some are verbal. That's okay. You want to get them written down though. What are the right accounting policies that you need, and what should they be? And do you need an accounting operations manual that has all your different accounting policies? Revenue recognition, travel and expense, petty cash, expense management, payments. These are all policies that dictate how your business operates. And putting all these policies on paper, if you will, enables you to function and really grow the business effectively, scale the business, because you can bring in help. They can read what's going on, they can read your policies, and they can jump in and hit the ground running without a ton of training. So making sure that you have the right policies in place is critical. You could have cash disbursements, right? So managing all the different operations for your business is absolutely necessary. And when you have cash, it's even more critical to have those policies in place that protect you, protect your cash, protect your money. So what's your cash disbursement policy? If you're giving cash out for some reason, and it doesn't have to be green money, but if you're going to send a wire or an ACH, what is your disbursement policy? How do you know that that wire is getting to the proper recipient? If you receive cash, same thing. How do you know that the amount of cash that you're actually receiving is the proper amount? Reconciling what's in your bank. So that bank reconciliation, you take your statement at the end of the month and you're going to reconcile it with what you have in your accounting system. And if there are differences, that could be something that's a problem. Typically it's not, but it's worth investigating. Purchases that you make, travel and entertainment policies, corporate credit card policies. These are all different policies that are critical to running your financial operations, your back office. Payroll, of course. What do we need to do to pay our people on a timely basis? What information is needed? How do we account for vacation or paid time off, sick leave? It could be bereavement leave. There's all sorts of items that affect what goes into payroll and how much am I paying my people and how do I get the information out of my payroll provider into my accounting system so that I can then report on it. That's all critical. It's all part of your financial operations. Your fixed assets, your machinery, if you have any, a car, whatever it might be, tracking the purchases, depreciation, and maintenance, right? So you have maintenance expense, you have new equipment expense, billing and collections. What is my policy around billing? How do I bill my clients? What do I need to present to them? What invoices do they need to get? What backup detail do they need to get? Is it net 15? Is it net 30? Do they pay ACH? Do they pay via auto debit? There's a lot of just pieces to your billing, invoicing, collections department that are critical to ensure that you have proper cash flow and a proper control over how much money you're actually collecting from your clients. And then again, on your reporting, month end and year end reporting, what do we need to put in those reports? What does the financial package look like? What KPIs should we be using? These are all parts of the policies and processes and controls that you need to have in place. So when you think about internal controls, it's about accuracy and making sure that you have accurate accounting records. And if you have the right data coming in, it's that garbage out, garbage in, garbage out. Make sure you have the right information coming in and you won't have any garbage coming out. Another key piece is preventing and detecting and preventing fraud, right? Yes, you say, hey, I've had the same bookkeeper for 20 years and I trust them implicitly. That's fine. But what if they're out sick or that somebody's on maternity leave for a couple of months and there's a new person in there? You need to have another set of eyes. You can't have all the control in one person. So a lot of banks these days have what's called dual control. One person enters the data, but another person approves the payment to the vendor. This is how you safeguard your assets. This is how you make sure that you have the money that is being reported on your financial statement at the end of the month actually is in your bank account. And that's critical so that you understand, hey, this is my money and I'm making sure that I'm safeguarding my money because that's a big piece of the value of your business. So you want to have all these policies and procedures and controls written down in a operations playbook or accounting playbook so that you can have smooth operations when somebody's either out sick or out on maternity leave or just leaves for whatever reason, and you have a new person in there that you have to train. At the end of the day, it's all about getting reliable information out of your accounting platform, out of your financial systems, so that timely and accurate reports enable you to make timely and accurate decisions. And this is critical for any business that's growing and scaling. So as an example, controls for accounts payable, we talked a little bit about this, but dual control, two or three-way matching, looking for duplicates, invoice approval, purchase order approval. It's easy to fake invoices. It's easy to fake purchase orders. It happens all the time. Somebody will submit an invoice and it looks real. And somebody in the accounting department, the bookkeeper, whatever, say, yep, I got an invoice. I got to pay that invoice, right? That's what we always do. And they just put in the bank information and all of a sudden $20,000 leaves your bank account. So you need to make sure that you put in place controls to prevent things like that. Data entry controls, right? So how do we record data before it's approved and what do we do after it's approved, right? So there's various ways of making sure that throughout the approval process, there's a workflow and proper people are looking at things with more than one person with a set of eyes. It's making sure that you have the right approvals in place before money goes out the door to your vendors. And then entry controls, right? Segregating duties, tracking check numbers, securing checks, and making sure that when a vendor says, hey, I have a new bank account, how do you confirm that that's actually correct? And so there's a lot of work that you need to do to make sure that people aren't stealing from you. It just happens. So, the takeaway, what's the purpose? The purpose is implementing the controls and procedures is to make sure that you do avoid fraud, right? And you improve efficiency. You improve even employee satisfaction, right? Because they're not redoing things all the time. So making sure you put in place the right process, right policies and procedures will go a long way to creating a smooth running machine. And then make sure that you have a variety of sources to track mistakes, right? And make sure that you don't repeat the mistakes of the past, and put in place, again, these policies to prevent any risks from occurring that you can avoid. This is the fifth pillar of the financial infrastructure. And these are the components that we need in order to properly grow and scale any type of business. We do have a self-assessment, so if you're interested, click on the link below, send an email to us. We'll get you this assessment so you can do an assessment yourself. How am I doing in terms of financial infrastructure, and where am I lagging? Where do I need help? And then we can come in and provide that help to you very easily and cost effectively. So please do reach out. You can find us at www.tcrh.co. We provide a whole host of services. Again, we've been talking about finance and accounting today, but we have other services. So should you need anything else in HR, M&A, capital raising, we can provide those services to you as well. So I look forward to hearing from you with any questions. Again, thank you for taking the time to go through all this with me, and have a great rest of your day.